Hi, we're here at the Resources Rising Stars Boom in the Room conference, and I'm here with David Reeves, Managing Director of Calidus Resources. David, can you please give us a short and sharp rundown on where the project is up to?
Yeah, thanks, Paul. Calidus, we're building Stage 1 Warrawoona gold project, going to produce 90,000 ounces per annum, all-in sustaining cost around $12.90 an ounce. We're about 6 months off the first gold pour, so 67% complete as we stand today. An exciting 6 months ahead as we head for first gold.
Now, as you move into that home straight, Dave, I heard you in your presentation to say today that in fact production could go much higher than 90,000. I think 135,000 ounces a year was the figure you mentioned. How do you get to that point?
Yeah, absolutely. So Stage 2 of Warrawoona will bring in the ultra high-grade blue spec deposit, 16 grams a tonne. That boosts us up to 130 to 140,000 ounces, similar all-in sustaining. Sees our Ebitda go from 90 to 100 to about 130 to 140 million per annum.
Now that Ebitda shows that the project will be very cash flow strong, free cash flow generation, particularly given the Australian dollar gold price at the moment. What will it mean when you're doing 135,000 ounces? What does that say to investors about why they might want to hold Calidus shares?
Well, if we are putting out 140 million of Ebitda per annum and we've got a market cap currently of 240 million, then we're trading at less than 2 to 1 on an Ebitda to EV valuation. And most stocks trade at a hell of a lot higher PE multiples. So yeah, there is significant upside in the share price as we get closer to production and into production.
And what do you think will be a re-rating event for Calidus between now and the start of production?
A lot of drilling coming up. I think as people realise that this is real, we will be producing gold in 6 months. You tend to see at this point some movement in the share price as we close in on it. And then obviously once we start delivering on everything we've said we'll do.
Now there's been a lot of talk in Western Australia about rising production costs and rising construction costs. Did you get in ahead of the sharp increase in those overheads, Dave?
Yeah, timing's everything, Paul. I wish I could say it was great management, but it was just good timing. So we've got a lump sum fixed price contract for our main build, which is the plant with GR Engineering. So certainly from a capital cost, we're not seeing any blowouts. We're on time, on budget. Operating costs, labour market's moving. There'll be a slight increase in costs through the labour rates. But otherwise, we've got fixed price things for LNG, for instance, for our power station. So we have locked in a lot of those prices. So, we don't expect it to impact us much at all.
So finally, I see some of the analysts have said they believe the stock's a buy because there will be an opportunity for the stock to re-rate as you move towards first gold production. It's really a pretty simple investment proposition, isn't it?
Yeah, I would have thought so. I certainly think so. So, yeah, most analysts have got around $1 share price target as we head into production. And then once we prove ourselves, that goes up from there. As I said today, we're not going to be a one-trick pony. We're already looking around what's next. We want to be a multi-asset, mid-tier gold miner, and this is just our first step in that journey.
Thanks very much, Dave.